Hi traders, how you doing? Hope trading's going well. My name's Dale. My website is theforexguy.com, and today I'm long on the pound yen and I'm on the 8-hour chart here. I didn't want to really talk about the trade setup. I wanted to do it more of a motivational psychology kind of video. And this really applies to all traders, but it really hones in on swing trading as well. So with swing trading, what you're actually doing is, you're basically buying low, selling high. You're working off those principles, and you're looking for those retracements and evidence of more strength or weakness coming in that you can use to build a trade idea. Now, I trade by the philosophy, which is plan the trade and then trade the plan, which means that first you gather your evidence, you look at your price action, whatever trading system you want to use, you actually look at the chart and you come up with a solid plan, a trade that you are confident with. I'm not talking about your general trading plan. I'm talking about an individual action plan for each trade, because you really do need that. It doesn't have to be elaborate or anything like that, just a simple kind of rule set that you're going to stick by to make sure that you remain disciplined in the trade. Gather information and we say, okay, we see this signal here, we see some follow through here, okay, what I'm going to do is I'm going to take a breakout of this candle high and put my stop low here, and if the breakout occurs, I'm triggered in, and I'm going to set my target just above this resistance here. I don't think I have this resistance marked properly anyway. I'm going to set my resistance up here, which gives me 3 times reward. You're playing your trade out like that, and you set up some mini criteria just for this trade. Now, the reason that I'm bringing this up is all the time, because I do deal with a lot of traders, and it's just like this is a bit nice little side pitch for my battle station tool here. Basically, my battle station is a chart scanner that I made, and it's got candlestick recognition in there. And as you can see, it's just sent me a bunch of alerts as a new candle has formed on all these charts, and it's just telling me about certain patterns that have appeared. And if you've got any technical levels or anything drawn, it actually works with that. This one's saying it closed below the weekly low on the New Zealand dollar 6 hour, so we must have some pretty bearish price action there. And you can use these alerts to check out the chart and see if you want to plan the trade. Okay, that's a nice segue into what I'm talking about here. So we see these like patterns and alerts coming in. That doesn't mean we just rush into the charts and just go there and just throw buy orders or sell orders at this. We got to go to these charts, evaluate the trade, see if it's right, see if it fits within the technical context, and then plan the trade. Okay, I'm going to do this. Okay, I'm going to set my order like this, and if this, that, then kind of thing. Just really simple, nothing complex. Basically, my little plan here was to take the breakout of the high here. I had my reasons for doing so. Basically, I wanted to take a breakout of this high here, get my stop below that low there. This, right now in this situation, I see many traders shit their pants and they exit the trade, and this is where I think trading psychology just really eats them away. Right in this situation now, okay, so here we're filled with endorphins. We love this. The trade triggers, it's rallying up. The profit and loss statement. We're just going up in profit. We're just staring at our trade in profit and just thinking, great, I'm a winner. And then this happens. Profit and loss goes back down. We're almost going back to $0 here, back to the break-even mark. This is where traders collapse, and it no longer becomes plan the trade, trade the plan. It becomes plan the trade and then get all emotional and do silly things afterwards. So this is very common in swing trading as well. So we've set our target up here and we've kind of committed to that. And we need to kind of actually define reasons why we would exit the trade. All right. So if we define those reasons, this is one reason here. When we reach 3 times target and we have an automatic take profit, okay, that's going to be taken care of us. It's a set and forget kind of scenario. We set our breakout order, we'll stop loss, our take profit. Okay, that's all set up. We don't have to touch it. We can come back here and check in from time to time. And then we see this. All right, this is the kind of point that I'm trying to drive home here. So the market's dropped back down. It's going back towards break even. Panic alert sets in, especially for the newer traders who are very interested and focused at Forex, and they like to sit down and watch the charts. this isn't really what you want to sit and watch. Your trade retracing against you. What I normally do is with these corrections, I don't crap myself, I let them play out. Because you have to remember that the market likes to go through these, it pushes up with the trend movement and it goes through these correctional phases. It can be difficult time to time to determine, is this a correction or is the market really reversing on me? That can be difficult, and sometimes the market might just drop back down out of nowhere and just stop you out. That's what your stop loss is there for. The trade idea didn't work out. You can't avoid those kind of things. However, the only reason I would exit the trade early is if there was a very obvious warning sign that this market does absolutely not want to come up to my 1 to 3 target. So let's say we moved up here and then we got this, I don't know, like massive bearish rejection coming in here, and it was a very strong signal. It's a big bearish body on that, and then the market started to bleed lower. Okay, now you have a reason to get out of the trade, and that would be part of my little plan. Okay, I'm going to do this, I'm going to set my 3 times target. I will get out of the trade if this massive, obvious, bearish reversal price action evidence is presented to me, and the trade clearly is like flashing, slapping you in the face, like doing a 10-punch combo. I'm not going to reach your target kind of thing. So that's one reason I would exit the trade early and intervene. You want to avoid that as much as possible, but if you have to, it has to be under very, very clear circumstances. So with that in mind, do we really need to exit this trade now? I mean, this is the moment that, like right now, I'm capturing the moment where most traders are really having a panic attack and making mistakes. So right now with this correction, are we seeing huge reversal price action? Are we seeing evidence that the market is going to reverse against me and that target is absolutely unlikely to be hit? Are we in danger of getting stopped out here? My answer would be no. If you find yourself in this situation, just calm down. Maybe you should write some notes on what you should do if this scenario happens. A trade starts to move against you. You have some action notes to follow, like, is there any major obvious reversal price action? Okay, put it this way. Would I trade this as a sell opportunity? Like, if I seen that on the chart, would I sell? Because if I was going to sell that, then it's like pretty obvious that the market really wants to move down, and I really believe that, and I think there's room to maybe come down to this support or whatever. If I really believe that, then you probably should exit your buy trade, but I would not sell that. If I see this on the chart right now, that is not something I want to sell, especially in the context of what's been happening recently. So it's not a sell signal for you. So why would you be threatened by it and exit your buy trade? So you'd have that on your notes. Would you sell? Would you actually open a sell order? Is it that good of a bearish situation that you would actually exit your buy trade and open a sell? If that's the case, if you're really confident in a sell, then probably you should exit your buy trade. Now that's going to come down to how good you are with your technical analysis. This just looks like a correction, and these are natural. And especially if you're swing trading and even breakout trading and stuff like that, you're going to have to learn to sit through these corrections. And this one isn't even that bad so far. So we're just waiting for the market to pick up off a higher low here. We can see, we look to the left, we've got a swing level here. These were the previous highs. We've broken out. Classic kind of pattern by the market. We break out, we come back down, we retest. Here is actually a good spot to look for a buy signal, actually. If a buy signal popped up here, that would be actually a good place to also think about entering the trade. So look at this bearish price action in context of what's going on. It's not threatening at all. The market's just bleeding back down. It's going through its correctional kind of stage. We're not seeing this kind of, intimidating bearish price action or anything like that. In the context of things, we've got high highs, higher lows, and we were expecting a higher low to develop somewhere around here because of this correction. We would want to see a bounce off there to indicate the trade is still healthy. It's an opportunity to get in with another swing trade here, another buy signal. So basically, there's no reason to panic and no reason to exit here. And I think this moment right here, I truly believe this is where a lot of traders are going wrong. Plan the trade and trade the plan. Okay, and if you're finding yourself in situations where you're getting into like psychological mess and you're on edge and getting anxiety and all this kind of stuff from these kind of corrections, you need to write down some things on a little sticky note or on your computer. Have a little list of like your emergency sort of like psychological checkpoints of what you're going to do to kind of deal with this and evaluate whether it's a real threat or you're just panicking for no reason because your trade's retracing against you, kind of thing. And like I said, one of those reasons would be, would you actually sell what you're seeing? If you don't actually see it as a good situation for selling, then why would you exit your buy trade? So I'm going to leave this trade here now, and we're going to come back and in the next part of the video and see why I had no reason to panic. I'm expecting this to hit target and be successful, so we'll see if I'm right. So I wanted to do this little video update just to show you how the trade's progressed and just a few things and a few points I'd like to make while the chart's fresh in this state. Firstly, we can see that, remember how I said we do have a potential hotspot here for a buy signal to occur. So we've actually got another 8-hour bullish rejection candle that's printed, which is a very healthy sign for the bullish situation here. It means there's still strength in the market, and it's likely that we're going to see some pushes into higher highs here. So that is a big plus, but there's that swing level there, so we're picking up off higher lows. Now I just want to make this point. I haven't touched my trade, I haven't modified anything, and I'm going to zoom right in here and get some full focus happening here. That's the best I can do. So moving your stop to break even and why it's detrimental. And there's a bit of a clause to that. So moving your stop to break even is fine in some circumstances, but not before your trade's actually had a chance to make a decent push up or down into some decent reward. But the break-even stop, we've reached $100 here, or whatever, 1-to-1. Yeah, we've reached our 1-to-1 risk-reward ratio. We've pushed up a decent amount, whatever it is, and then I think, great, now I can lock in profit and extinguish all my fears of losing and profits moving against me. So you got to think of that break-even stop. What really is happening, is you trying to extinguish some kind of fear. But what you're actually doing is you are really choking your trade, its potential to actually hit its target. Now in this situation would have actually breeded more frustration because the market has retraced. We got pretty close to my break-even here, and here we actually touched it. This candle would have stopped me out at break even, all right, and then produced a buy signal as it picked up off a higher low here. That is the ultimate level of frustration that a trader can possibly get, and even more so if this trade absolutely explodes up and hits the target afterwards also, which is likely, it's the likely scenario right now. So moving your stop loss to break even so early and reacting to those fears of losing money kind of thing, it's counterintuitive the way it works. It's detrimental. You're choking your trade. What you really want to do is let those winners run and reach high targets, and the losses, well, you're controlling that with your stop loss and your lot sizes and stuff like that. All right, so that's what I wanted to highlight here. Now we have that buy signal. I'm not interested in scaling in because we're not really much up in profit here. So, it basically retraced back to where I entered anyway. So, I'm not going to scale into this because we're not on the next sort of step. If we were up here somewhere, maybe you could think about a scaling in strategy or something like that. Moving to break even is sort of reserved for me. If the trade actually pushed up into a higher high now and actually really screamed higher, then we can think about moving our stop to break even, and then maybe implement a trailing stop or something like that to start locking in profits. It's all about planning that trade and trading the plan. Moving your stop to break even so early, that shouldn't be in your plan. You shouldn't do that, and you shouldn't have those kind of knee-jerk reactions. Break-even stops have their place, but aggressive break-even stops to extinguish that fear, yeah, that doesn't really work. And some of you traders out there who've done this and used that break-even stop-loss strategy, and ruined the plan you had for the trade, well, you're probably agreeing with me here that it's bitten you in the butt a few times. But I'll let this trade roll out and I'll come back and do a conclusion video here. Hey traders, just wanted to conclude the video, show you the trade. It's actually hit target, and I hope you got a few points from the video. I mean, the main takeaways are, if you're trading and you need to hit some extended targets, there's going to be market retracements along the way. You know that emotional intervention is damaging. So you need to do whatever you can to sort of like control that. Traders have this expectation where the trade triggers and then there's going to be a straight B line, point A to point B movement straight to their target, when that's not really the case at all. We're going to have to sit through some of these retracements. Profits won't go from zero to target, in one move. There's going to be this up and down along the way. That's trading. That's the kind of psychology that you've actually got to deal with in the markets. I hope the tips in the video help you out with that. If you want to learn more about the price action trading that I've showed you in the video here, that's how I've taken this trade and how I analyze the charts, reading structure and price action and finding signals, you can find more about that on my website, theforexguy.com. And if you have any questions, just email me there. But there's a lot of other videos on my YouTube channel here, and I've got a few tutorials on my website as well. So if you're interested in this kind of price action stuff, there's plenty of content to digest there. So hopefully next time you encounter this situation, you will be a little better prepared. All right, guys, best of luck on the charts.